Okay, let's go. All right. So just I was mentioning there when before we got started here about the news here, and looking at some of the news items in the morning, it said one of them was that the market is stabilizing here and oil's rising because session fears are receding. And it's just, I guess, part of the times and just the schizophrenic one day crazy fear, one next day just off to the races, bull market returns. How fears of a recession can change from one day to the next. But it sounds kind of ridiculous, but it is what it is, as I like to say. And that's exactly what the news says. So we'll see. These things, as far as these yield curves, inversions, and so on, they don't change on a dime. And so we'll just have to see how things play out over the next week. And for the moment, we just will see what transpires today. So we can see the markets are up. And anytime we look at any, minder, we turn around and we go to a minder and we say, oh, this is what's leading and this is what's up and so on and so forth. We then go to the chart and we say, okay, something's up, like the Dow is up 200 points here. I'm looking at the S&Ps, but so the S&Ps are up 23.5 points. Well, is that significant? Meaning, is it just retracing into a gigantic bearish red bar where sellers are going to be? Or is it gapping above the high of some other red bar that maybe not this big, of course, because it would have been up a whole lot more to gap above that bar. But point being, you have to go and look at where prices are in relation to this move. And where we're at right now is, okay, well, the markets formed a low yesterday. As you can see here, that this was yesterday morning when we were looking at the wide range bar. And so we were thinking, and I had showed the 5-minute chart yesterday where it was going sideways. It's like, well, if that can get above that area, well, we can go long into this void. Well, that never happened. It just chopped and ground. It was, the frog in the blender pattern. And then it went down. And now, you see it's come back again, came back at the end of the day. And now it's higher this morning and consolidating. So looking at, we got a green bar here, even though there's a giant red bar, as we always say, big red bars are a momentum move in a smaller time frame. And it's exactly what you see on the hourly chart. So what we have now is a void. Now, it's Friday. Do buyers want to keep this going? Well, I guess that's just what we're going to see here. And so this little consolidation right there is bullish, and it popped up. So this is our line in the sand here for support intraday. Since prices are consolidating nicely at the top of this wide range bar, the assumption we make is if it can trade through 2880, well, that enters the void, and 2900 should be the next stopping point, even though there's nothing to the left here. That's the next big round number. So I would think that the move from here to here should happen. Now, the next thing that we're going to be looking for is what happens at the end of today, as we do every day. Where are prices at the end of the day? And today being Friday, where are they going to be? Especially at the end of this week, because last week was a bottoming tail as it came down into the area of this prior low. And, as we talked about earlier in this week and last week, was the speed at which prices came down. And I don't have it here. I can go back to it. I talked about, at another time, the speed at which they went up there. And that's suggesting continuation. Now, this suggests continuation too. And the markets here, buyers are screaming, kicking, fighting, as they should, to try and hold it here. The weekly chart is in an uptrend. And so we'll see if they can actually get it going here. So if they can, this will move higher today, and it'll hold those gains. However, if they break down under 2860, this is going to be an ugly red bar at the end of the day, and that is going to suggest next week we're going to see lower prices. So we're looking for information here to give us some guidance in the short term for today. That's what we do every day. And in addition, since it's Friday, where are we going to be at 4 o'clock in the afternoon today? And we'll find out at that time. So let's see what the other markets are doing. And let me get rid of this and this and the NQs. You know, and one of the themes over the last week, even 2 weeks, is that many of these markets, the majority of them, look very much the same. Not exact, but you know, as you look at the pictures, you know, they look very close. And so big momentum move down, you know, the move lower, the move up, the retest up, the wide range bar. You see prices are inching lower down toward the bottom of that wide range bar. So that's a short term, not positive. It hasn't negated it yet. But as I said, with the S&Ps, you know, so with this, if it trades down below here, we then have a breakout failure and a new area of resistance. So here's one of the concepts from Master Trader Technical Strategies. And everything is built on creating a thought process which guides us and saves us from ourselves, in a sense, right? Because especially once we get a position on, we get caught up in our own bias, especially when our money's on the line. So right now, things look like they go up, no doubt about that. However, if this trades under here, and let me back up a second. Right now, we're looking for this to go higher. We've got this void, which says, hey, we could have a decent move. But if prices go under here, they've now created an area of resistance that was not there. This now ends the void idea and going higher unless some miracle happens and they pop all the way back up again. And historically, a pattern like this that does that doesn't happen. So there's your line in the sand there. We really don't want to see prices go back under the wide range bar. And they've already kind of somewhat neutralized it because it's past the halfway mark, which we know when things are bullish and they're doing what they're supposed to do, the prices stay in the upper third and then they go higher. So they're coming back in here for the moment. And you can see, let's just flip this to a 5-minute for a second. You see how they're trending lower here. And, you know, the retracement's getting a bit deep. We'll see where they are. It's 9:12. You know, we got another 18 minutes, and maybe it's down here at the lows. And this is going to be a topping tail. It's still an incomplete bar since it's first thing in the morning. But just goes to show you that you have to be flexible in your bias and adjust based on what the charts tell you. Right? Human nature will suck you in to believing what you want to believe. And that's why people incur large losses. Well, they start with no money management anyway, but you know, what they do totally after that destroys them. Well, we're gonna get to the Russell once, piece by piece here. We know that all of these look the same pretty much here when they're coming down. The Russell, Alex is saying the Russell doesn't look like that, which we're going to look at. The Russell hasn't looked like these for a while, meaning, let's just look at the ETF first. It's been going sideways while the others have been going up. So it's been underperforming, and it led the way down, right? So it's gotten pounded. Now, what happens is, whether it's an index or a stock, the ones that lead the way down typically show some relative strength, meaning they don't go down as much. Maybe they go sideways. as other stocks within the sector go down, or in this case, one index versus another. So the sellers kind of back off because it's down near some support here. Now, if this should start dropping from here, well, this has got a void, and that's going to be a big move to the downside should that actually, break under these lows and they start heading lower. So looking at the futures here, and you see that they're already down, and they did not recover as much as the others did yesterday. So here they are. While they're not dropping at the moment, well, they're right up at this resistance area here. So we really have not the same, but a similar bias in that, look, if it can clear this area at 1480, we should be off to the races, to the upside. However, if it breaks down under 1470, it's probably going down here. So, this is what we have to deal with today, and what we do every day is to say, what does the higher time frame tell us? What does the intraday time frame tell us? We mark off our reference points. Is it a trading range? Is it an uptrend? Is it a downtrend? What'll change? What has to happen to change what is in the moment? And as you can see, these are coming down here to support. Now the question becomes, right, of course, is when anything comes down to support, there's going to be buyers there. So at the moment, it looks like it's going down there. It's vertically moving to the downside. So when it gets down there, let's see if the buyers want to step up here, and I'll be looking at the rest of the group. And you can see as they're nose diving here down toward that support that we looked at. Do they hold? Is it a trading range day? So we'll be in information gathering mode as to see what happens. If this goes sideways here into 10 o'clock and can't pop back up into the void above that it's now created, but it's got resistance above, put a fork in it. It's done. It's going down. Or we're just going to be in a trading range here today, probably just bored to death and just staying out of trouble and not be the frog in the blender. So we'll just have to see how things transpire. Right now, buyers are getting a little, let's just say, losing some of that exuberant confidence that they had a couple of hours ago. We'll see how it plays out. Oil, which was up a little bit, right? That's coming in. So I guess the recession fears that had rescinded a few hours ago are coming back. I don't know. Mr. Schizo here, changes from moment to moment. It's kind of it's funny, but it's sad in another way. But this is the market that we're dealing with now. It's kind of like you have all these hedge fund managers, which admittedly, there was one on CNBC said it's the toughest market that he's experienced in 20 years. And, he was honest. So that was cool. But, these guys obviously are using leverage like we all do, but probably more so since they're not as regulated. So it's kind of as if these guys are sitting on the edge of a razor blade. It's like they don't want to miss if the market goes up. So they have to move faster than they typically would. And it just makes for this kind of crazy trading. It's just the way it is. Gold is holding up here really nicely. So far, silver is doing well. Yeah, they're super nimble, and it's extremely hard. I mean, the more money you have, the less you can be nimble, right? So, you can move $1 million, in liquid stuff. You got $1 billion. Good luck, my friend. Not going to happen. So, not without, moving the market. And all these guys, one guy he's got 3 billion. Another guy's got 20 billion. Another guy whatever, so all of and for the most part, while they're not all in the same position, they're all gathering the same information. They're a herd. And as you can see, the markets can fall precipitously in a pretty fast amount of time. So that's pretty much where we're at there. The transports are confirming the nosedive that you would typically see with recession fears. And, this is like within striking distance of these. This is the most extreme, the 3-month versus the 30-year of moving toward inversion, and the 2 versus the 10, which has been in the news, has kind of been flip-flopping around the 0 line there. So we'll see how that all shapes up. And may as well just look at TBT here for a second. And while that looked like an exhaustion gap, it wasn't, and down it's gone. Huge volume spike again yesterday, so maybe some stabilization here. And you can see as TBT here, and that rallied at the end of the day, and so it's kind of just hanging there. We'll see, what bonds will be doing here, whether they start moving up again or what. So it's kind of like a moment-to-moment day traders market, where just give it a whole bunch of room, if you're going to be in there for a while. So Dan is with us from Bimini. Yeah, leading the good life down there off the yachts and so on. And I think he's going to try and cover some things with us here. Are you there, Dan? I don't know if his internet connection is up to speed, so to speak.
Hey, good morning, sound check.
I don't think he's
Can you
going
hear
to
me?
make it with us. Oh, you are there. So I don't know if you can speak, Dan, or not, but
Good morning. You can hear me? Okay, awesome. Yeah, no, sorry, folks. I got a brand new headset here. I'm here in the beautiful island of Bimini in the hotel lobby on their internet, which is horrible. I told that to Greg this morning. He said, yeah, that's because they're more interested in fishing than having stable internet. All right, so I'm sorry, folks. I'm just going to do the best I can. Let's go through opens here on the weekly. Millennium, we have a put spread, $10 away, the 240s. Beautiful trade there. And I said to try to bid a dime. So you may or may, if you got out, fine. If not, just let it expire worthless and give it a big old stop, because the 240s are far away. And we also have a covered call. WW, we have a covered call. It's a bullish weekly monthly. SRC has not triggered yet, and this is what I call a pig target. Weekly 1, 2, 3. Monthly looks great. A little breakdown failure, price void. My target is 50 to 55. Originally, the entry was over this week's high, and then I said, let's see if we can find another entry. I actually like yesterday's topping tail, so I've changed the entry to yesterday's high. JHG, we are short stock. Now look how long it takes for my data to populate. So we're short stock, and I move this up to yes high. Dish, we've been in this climactic buy up for, and it's gone under our top. It's gap stops, but believe it or not, the minute low has held both cases. CDLX